Hey traders, Cousin Benny coming to you on Saturday the 21st of June with a tutorial, if you will, on minor nuances that if you follow them and our scans, the end result will be higher probabilities on the charts that you are trading. If you're going long, one of the things you want to look for, obviously, if you follow us, is a good pattern. In this case, we have a triangle. We also were looking for the Bollinger Band squeeze here. And we were looking for volume along with stochastics and MACD. So here are the nuances. First of all, on the night of the 16th, we published a scan for the following day, Wednesday. We talked about looking at a number of stocks, one of which was Constellation Brands. And when you consulted the chart at the time, we had yet to break out of this triangle pattern. So that's what we were looking for. The Bollinger Bands were squeezing, Keltner channel was pretty much moving sideways, and MACD was headed down. So if we look at the chart, we can see that MACD followed stochastic, and this is what we look for. We look for stochastic to turn faster, being it's based on this criteria here, 5, 3, and 3. You could use 14, 3, and 3. You'd pretty much see the same result. What you want to look for is stochastic leading a turn and anticipate a turn in the MACD, which, like if we looked at the previous chart, we could see that MACD was continuing to head down, and you could see that the histogram was still negative, as it was right here. But stochastics told us, look for a turn in the near future. So we started to watch for volume, and if you count backwards, Wednesday was right here, this third candle. And that's where we got our breakout. Okay, Bollinger Bands, we expected to expand. The whole theory behind Bollinger Bands are they include 95% of the price action. When it gets outside of the Bollinger Band and hits what's called the third standard deviation, that includes 99.1% of all price action. So if you get outside of a Bollinger Band like you see here, you would anticipate a move in the opposite direction, which is what you saw here. Also, when Bollinger Bands expand, that's high volatility, and then high volatility is usually followed by low volatility, which is where you see the Bollinger Bands contract. All right, so that's what we're looking for. Bollinger Bands were contracting. We had a nice triangle pattern, and we were looking for a Bollinger Band expansion, which when they touch the Keltner channel, that triggers a TTM green signal. All right, so right now we're outside of the Bollinger Band, and I expect that we would see, being it's touched the third standard deviation, that we see at least a sideways pullback like this here, a flag or something like that. But if you had entered here at 83.90, where the trigger was, you would have had a nice trade there. 4+ points, right? So the nuance is wait for stochastics to turn, watch what MACD is doing. When you see them both turning with the stochastic have already led, then you pretty much have a good scenario setting up that you will see a move higher. Now, as far as patterns are concerned, we look at Volkowski's book on Encyclopedia of Chart Patterns. Triangles have a 16 out of 23 patterns studied. Rate of success 1 out of 23. The number 1 pattern is a high tight flag, which we also have a scan for. Note the statistics here. The average rise after the breakout is 31%. So you could look at that with that particular chart that we were just talking about. You know, taking 31% increase from here and kind of getting an idea on an average basis what to look for. These are the kind of things that Mike and I look at when we are charting potential setups and candidates for trades. So if you're following us, that's the way we look at a trade. So let's take a look at another example, one that got quite a bit of attention on Thursday and Friday. On Wednesday, we sent out a blog post Wednesday night for a Thursday trade. We had SLXP on the scan right here. And at the time, we were looking for the same thing. Stochastics had turned up here off of this bounce off this lower trend line of this ascending triangle pattern. We had a second bounce. We didn't get down as low as oversold again before we turned. The day before, MACD was somewhat flat. So we were looking for MACD to turn, and it's exactly what we got on Friday on this breakout. So that was a $5.50 move had you gotten in on Thursday, anticipating what Stochastics was getting ready to telling you, and that MACD would follow. We already saw volume that was peaking previous to the Friday move. RSI continued to move higher, and we had a Bollinger Band squeeze with Keltner channel drifting higher. Prices were above the Kirby up here. So we had good things going for us. We do know, however, that ascending triangles do have less of a statistical probability of giving us what we expect. It's out of all of the patterns that Bukowski studied, 23 in all, 17 out of 23 isn't the greatest probabilities, but still it is good when you see the things set up I just mentioned. You have an average 35% rise after the breakout, and you can see the rest of the statistics here. So that's what we looked for. Typically you just want to see an upward breakout and trade accordingly. Okay, so let's look at the number one pattern that Bukowski studied. Now remember, these are several hundred patterns in each case, studied over a multi-year time frame. High tight flags are number one out of 23. The average rise after the breakout is like 69%. Off of a low, you're looking for anywhere from a 90 to 100% increase in price action prior to a nice tight flag, which is what we see here on Amaya Gaming. Now on June 8th, which is this period right here, just before it broke out, we sent out this blog post on the weekend. We were looking at Bollinger Band and high tight flags. Now we like high tight flags when they appear. They are more scarce because of the criteria. We saw Air Canada, that went on to do quite well. And here's Amaya Gaming. All right, it's new this weekend. I don't know anything about the company other than it trades on a Toronto exchange, and the price action suggests a look. Well, let's take a look at it. This is what we were looking at prior to the breakout. Now, granted, Bollinger Bands are expanded, and that's because for these 6 to 7 weeks, there was a heavy accumulation of shares, which is the first indication that larger, stronger hands are interested in a stock. Note where the Kirby is here. Prices moved above that area, so we anticipated a tight flag that would break to the upside. Now, the way to trade this is, in anticipation, you put a buy stop up here, say at 1150, and if the stock takes off early in the morning, you'll have a chance to get filled so that you don't get left wondering what happened. The second buy point is the break above the pole, which is 1163 at this point. So if we go to the current time frame, we look and we can see we broke out, and we've got that huge run up that we were expecting in Amaya Gaming, and it broke higher on Friday. Note the huge volume on the breakout. So here we go again. The stochastic had already turned, Granted, MACD was above, but note how it was very strong momentum-wise. So this is what you want to look for in a high tight flag. Momentum will continue to move higher because of the accumulation by institutions and people in the know. We had our Bollinger Band squeeze. That was the first indication way back in late April that something was going to occur. The second indication was when price action got above the Kirby here and then it tapered off. We knew that it was going to grow quite quickly. And then we saw a number of other things. Keltner channel starting to move higher. We had another squeeze and move higher. Prices move higher, and then we had this nice tight flag. That was our first sign that this was going to possibly be a winner. And we had two indications where stochastics had turned prior to MACD turning back up. So this is how you can use subtle nuances in charting. Make sure that you use both stochastics and MACD, and that you anticipate trades in the case of a long where price action is above the 20 period, for example, that you'll only be taking long trades, and when price action is below the 20 period, you'd be taking shorts. So you would reverse this scenario. Okay. So I hope this helps. This is Cousin Vinny coming to you from theclosingprint.com. Also come and check out our blog. If you're not a subscriber, it's free to subscribe. Just come over here, fill out your email, and click the subscribe button. If you have any questions about previous trades that we've traded over the past several months, we started the Bollinger Band squeeze scan post in December of 2013. Just click on the search button and enter any of the criteria you might be looking for, such as high tight flag. Press enter, and then it'll find all occurrences where high tight flag was mentioned. You can go all the way out to some of the first scans that we ran back in February when energy was taking off, and we had quite a few good looking scans at that time. Okay, so I hope this helps. There are other videos here if you're a new trader and you want to check things out. These top 3 videos here will help you substantially in increasing your probabilities for winning trades. Take care, and we'll talk to you soon.